Hey everyone, welcome back to the Share Trek Curiosity channel. I'm Tim, and I'm here with Jane, our market expert, to help you take stock of where we stand in this crazy financial landscape.
Hey Tim, always a pleasure to be here. Let's jump right in.
Okay, so let's set the scene. Markets are teetering near all-time highs, which can feel like both an opportunity and a tightrope walk.
Yeah.
What's your read on this, Jane?
Well, Tim, what's interesting is that when we look back historically, when markets hit these resistance levels, think of them as psychological barriers where big investors start making decisions. We tend to see either a breakout to new highs or a pullback. So there's potential on both sides, and understanding this is crucial for navigating the current market.
Got it, so buckle up. But beyond just looking at charts, there's this whole geopolitical drama unfolding that feels like it could throw a wrench into everything. I mean, J.D. Vance's speech in Europe really had people talking, right?
Yeah.
Alliances are shifting.
Absolutely, Tim. And these geopolitical shifts have a real impact on how markets behave. Think about it. Investor sentiment can turn on a dime, which ripples out to currency values, trade flows, the whole shebang.
For sure. And speaking of geopolitical hotspots, the situation in Ukraine is still front and center. There's buzz about the war potentially winding down and those Russian sanctions possibly being lifted.
And if those sanctions do lift, Tim, we could see a tsunami of liquidity flooding in for rebuilding efforts. That would impact commodities like oil and gas, no question. Currency markets would likely go for a ride, too.
Okay, so things get pretty wild. But then there's the wild card Donald Trump potentially gunning for a Nobel Prize. Imagine if he brokered peace in Ukraine or the Middle East. How would markets react to that?
That's a fascinating scenario. I mean, such a development would send shockwaves across markets, both here and internationally. But we can't forget that Europe might be charting its own course, continuing to support Ukraine regardless. That could create a much different outcome for global markets.
Oh, predicting the future is always a risky business, especially in such a volatile world.
Okay, let's pivot a little and talk trade. There's been a lot of back and forth about reciprocal tariffs and what they really mean for the economy. Tim, I think the impact of these reciprocal tariffs might be overblown. Here's why currency values could stabilize and governments might actually start dialing back tariffs to avoid inflation. That could lead to freer trade in the long run.
Interesting. So maybe not the all-out trade war everyone was bracing for, but you did mention that tariffs on Canada, Mexico, and China are a bit of a different beast. What's the story there?
Those tariffs are more complex. We could see delays, watered-down versions, or even just symbolic gestures. And this uncertainty might push Canada to look for new trading partners. That could lead to short-term disruptions as supply chains realign, but eventually things would likely settle.
So with all this market volatility and geopolitical drama swirling around, what's a smart investor supposed to do? Where are you focusing your attention these days, Jane?
This is where things get really interesting, Tim. I'm keeping a close eye on gold and crypto. They sit outside the traditional financial system, making them less susceptible to manipulation. Gold especially has a long history of acting as a solid reserve currency.
Gold, huh? I'll admit, it doesn't always get the same buzz as stocks or bonds. But why is gold particularly relevant in today's market? Isn't the idea of gold as a safe haven kind of outdated?
Not at all, Tim. You see, gold has these remarkable qualities. It's scarce, durable, and has a ton of industrial uses. But here's the kicker. Governments can't just print more of it like they can with fiat currency. That makes it a powerful hedge against inflation and devaluation, especially with what we're seeing right now.
Okay, you've got my attention. But let's be real, isn't gold a pain to invest in? You can't exactly carry gold bars around in your pocket.
You've got a point there. Tim, portability and storage are definitely drawbacks. That's why gold ETFs have become so popular. They offer paper ownership, which is more convenient. But there have been some red flags recently about whether some ETFs can actually deliver the physical gold when people want it. Remember those delays in the London gold market?
Oh, yeah, I remember hearing about that. So what's the best way to invest in gold then?
Well, buying physical gold through bullion or limited edition coins is an option, though. With those coins, you need a sharp eye to pick the ones that'll appreciate, like antiques. Otherwise, you're just getting the melt value.
So there's a learning curve there. But you seem particularly drawn to physical gold, even with the storage hassle. Why is that?
Because when you hold physical gold, you're not relying on any third party. Think about it. JP Morgan just paid a whopping $920 million to settle those precious metals manipulation charges.
Yeah.
That's a big reminder that even the giants can play dirty.
You've got a point there. So physical gold offers a level of control and security you don't get with paper ownership. But haven't central banks been moving away from gold in recent years?
Actually, Tim, it's the opposite. Central banks globally are gobbling up gold reserves. They see it as a Tier 1 asset under the Basel III framework. That means they can count it as part of their core capital reserves, a pretty strong endorsement, if you ask me.
Wow, that is a big deal. You definitely give me some food for thought. I need to do some more digging on gold.
Yeah.
But before we move on, I have a question about this stealth depreciation you mentioned earlier. What exactly does that mean?
Think of it like this. Tim, inflation is essentially the rate at which the purchasing power of our money, our fiat currency, is going down the drain. But this depreciation isn't always obvious right away. It's often a slow burn happening gradually over time, but often triggered by specific events or catalysts.
So like a frog in boiling water.
Yeah.
It doesn't notice the heat until it's too late.
Exactly, and this is where gold shines. Historically, it's been a shield against this stealth depreciation, preserving your purchasing power over the long haul. I've been tracking this in a spreadsheet, and let me tell you, the numbers are eye-opening. For example, just in the last decade, the US dollar has lost roughly 15% of its purchasing power. That might not sound like much, but compounded over time. It's a silent killer of your wealth.
Whoa, that's a pretty stark number.
Yeah.
I'm starting to see why you're so bullish on gold.
Yeah.
But okay, let's switch gears a little and talk about crypto. You mentioned it earlier as another area you're watching closely. What's driving that interest?
Well, cryptocurrencies, especially Bitcoin, have that same decentralized quality we were talking about with gold. They're not controlled by governments or financial institutions. That appeals to a lot of investors who are looking for alternatives to the traditional system, especially in a world that feels increasingly shaky.
So they offer a similar kind of independence from centralized control. But I've got to be honest, the crypto world still feels like the Wild West to me. There's so many different coins and projects popping up. How do you make sense of it all?
You're right, Tim. The crypto landscape is incredibly diverse, and it can feel overwhelming. But that's where digging beneath the surface is so important. Don't just chase the hype. Look at the underlying technology, the use cases, and the teams behind these projects. For example, I'm particularly interested in...
Hold on, before we go too deep down the crypto rabbit hole, I want to make sure we're not losing sight of the big picture here. We've talked about markets at a crossroads, geopolitical turmoil, the appeal of gold. How do all these pieces fit together for the average investor?
It's all about recognizing that we're in uncharted territory, Tim. The old rules of the game may not apply anymore. We're seeing this shift away from traditional finance, this hunger for assets that are outside the control of governments and institutions. Gold and crypto, in their own ways, represent that shift.
So it's less about picking specific winners and losers, and more about understanding these bigger trends and positioning yourself accordingly.
Exactly. It's about building a resilient portfolio that can weather the storms. Think of it as a three-legged stool. You got your traditional investments, your hard assets like gold, and then this emerging world of crypto.
That's a helpful analogy. Okay, so back to crypto. You were about to tell me about some specific projects you find intriguing. What's caught your eye?
Well beyond Bitcoin, which I still believe has a lot of potential. I'm looking at projects that are pushing the boundaries of what's possible with blockchain technology. For example, there's a platform called Ethereum that's not just a currency, but a whole ecosystem for decentralized applications. And then there are projects focused on privacy, on security, on bringing real-world assets onto the blockchain. It's a fascinating space to explore.
It sounds like it. But I imagine it's also a minefield for the average investor.
Yeah.
How do you even begin to separate the wheat from the chaff in the crypto world?
It's definitely not for the faint of heart, Tim. But just like with any investment, it comes down to research due diligence and understanding your risk tolerance. Don't just jump into something because it's got a catchy name or promises to make you rich overnight. Look at the fundamentals, the team behind the project, and what problem they're trying to solve.
Okay, so be smart, be cautious, and don't believe the hype. Solid advice for any investment, really. But Jane, let's zoom out for a second and talk about something you touched on earlier, this idea of a resilient portfolio. What are some key takeaways investors should be thinking about as they build that kind of portfolio?
Well, as we've discussed, diversification is absolutely crucial. Don't put all your eggs in one basket, as the saying goes. Spread your risk across different asset classes, your traditional stocks and bonds, your hard assets like gold, and then a portion if you're comfortable with the risk in this emerging world of crypto.
Got it. Diversification is key. But beyond specific asset classes, are there any bigger investment themes that investors should be paying attention to right now?
One theme that I'm particularly excited about is the rise of sustainable investing. We're seeing more and more investors who want their money to make a difference, to support companies and projects that are aligned with their values, whether that's environmental sustainability, social justice, or corporate governance.
So it's about making a positive impact while also seeking financial returns. Like that.
Exactly. Sustainable investing is gaining serious momentum, and I think it's going to be a major force in the years to come. And it ties back to this idea of resilience, too. Investing in companies that are tackling big global challenges, those are the companies that are likely to thrive in the long run.
That makes sense. Okay, Jane, before we wrap things up, there's one question I know is on a lot of our listeners' minds. What about real estate? With interest rates going up and worries about a housing market slowdown, is it still a good investment?
Real estate is always a tricky one, Tim. It's cyclical, meaning it goes through ups and downs, and right now we're definitely seeing some headwinds. But real estate can still be a valuable part of a diversified portfolio, especially for long-term investors. It can generate passive income, provide a hedge against inflation, and offer potential for appreciation. Just be sure to do your homework, understand the local market conditions, and be prepared for the long haul.
Great advice, Jane. So to recap, for investors who are trying to make sense of this wild market and build a resilient portfolio, stay informed about global events and how they might impact your investments, and don't forget about real estate, but be cautious and do your due diligence.
Excellent summary, Tim. And remember, everyone's financial situation is different, so there's no one-size-fits-all approach. It's always best to consult with a qualified financial advisor to create an investment strategy that's tailored to your specific goals, risk tolerance, and time horizon.
Absolutely. We always want to emphasize that we're not giving financial advice here. We're just sharing our perspective and trying to help you navigate this complex world.
Well said, Tim. It's been a pleasure as always.
Likewise, Jane, and thanks to all of our awesome listeners for joining us on this Take Stock journey. If you enjoyed the episode, be sure to hit that like button, subscribe to the Share Trick Curiosity channel for more insights, and leave a comment below. We love hearing from you.
Until next time, happy investing, everyone.